All right, guys, welcome to the 16 March 2022 meeting for Group A for PCT. Apologize for any background noise. My house is changing a bit. My wife has a new job, new hours, comes home about this time, and she has to get both kids out of the house tonight. So they're going to try to keep it down, but if you hear anything in the background, crashing dish or something, that's just dinner getting ready. Hope everyone had a good day today. Interesting day in the markets for sure. If you're a long bias like I am, it was a great morning. I didn't get a lot out of it, but it was a great morning. It was good for all our retirement accounts anyway, and then the Fed notes came out and it dipped and then it bought back up by the end of the day. Jerome Powell got on the mic and made everyone feel better, I guess. I didn't listen to any of it, so but I can only assume that's what was happening. But I hope you guys had a good day. The kind of day where we all saw it gapped up in the morning, and it can get you excited again, especially if you're a long bias trader. Those are exciting mornings when the market's been so bad and suddenly it gaps up, and you think like that this is the day, and you got to be careful. I did a good job, I thought. I'm not always that careful on days like that, and I was like, let's not make this into the day that looks so good and turned out so bad. It's just twice as disheartening when that happens. So I got some green out of the day, but I guess I left a lot on the table. I almost felt scared to trade today. Let's check out the dashboard real quick. So let's see. We are moving right along. March 2011th. That's the typo. March 21st next week. Looks like Mike's doing his class at 6 p.m. on Monday. I'll double check that for everyone, but this calendar is almost never wrong, except when it says March 211th-ish. But that's interesting. So that might go an hour earlier. And then if you don't know, Mike's moved his trade book meetings to 6 p.m. on Tuesdays from 5 p.m. He's got some doctor's appointments for the time being that conflict there. So hopefully that's not too troublesome for you guys. But no Thor class or anything. So just the two classes, both at 6 p.m. looks like next week. And then we'll have the regular Wednesday meeting as always. And we'll have our group meeting on Wednesday as well. Chugging right along on the roadmap here. I think I added a couple of check marks from last week, but we're really getting into the last month here, really. 21 days left to trade for boot camp at this point, and essentially the last month, because today's the 16th of March, and the last day of trading is April 14th, so that last calendar 30-day period. So we definitely want to think about refining as the main goal of the last third, I think. If you happen to be a person who's not, I don't think this really applies to anyone at this point, but if you really haven't focused on a strategy, I suggest in the last third of camp to go ahead and do that. If you're the person who's toying around with like 3 different ones, you might just want to pick one and just focus on that and get as much information as you can out of that one strategy so you really can refine it and do that work. But that's just a suggestion. If you want to spend the rest of the camp kind of playing around, then that's up to you, however you think it's best to spend your time. But this is where we're heading next for sure. I wanted to revisit this slide here. Maybe I should have had this in every meeting. I don't know. I don't like to beat a dead horse too much, but always good to go back and think about the whole trade 80 concept of trade your strategy, focus on something. Use proper risk to reward, always obey your stop, don't overtrade, gather that data we always talk about so you can do some true analysis on your performance, and then just remember that 80% of trading is mental. I talked to a couple traders today, and for both people, we talked more about this 80% here, the mentality of trading, and how that has so much to do with success. I talked to a trader yesterday from our group who actually has really crushed this, and and the results show. And he's actually going to present what he's doing next week, because I was so impressed with talking to him, especially not just because he just doesn't seem to have much issue here at all on the mentality of trading and doing the right things, but also his strategy was very unique. I thought it's a very VPOC, volume, point of control based. And so I thought it'd just be cool to see something a little different than what the rest of us are doing. But I did talk to a trader today who's having this issue, always obey your stop. And I know for me, that's my worst sin. The most embarrassing thing to admit is sometimes I see my stop coming and it's like, all right, it's time to get out. And I'll come up with a couple reasons or a reason why I think, no, I think it's going to hold. And it's just a losing way to trade. There's no good in it whatsoever. But yeah, he could get winning trades. That wasn't the problem. It's not what he's doing when the trade goes green, as often is the case, but pulling away those stops and just creating deficits that you just can't reasonably overcome. That's the problem with it. And I'm sure a lot of you are feeling that at this point. When it's so fundamental to trading that you obey the stop and you cut off where you are supposed to at -1R, but then you let your winners run and you get as much out of them as you can. But as you get better at letting them run, you'll start to realize how powerful that is and how much that does overcome the 1R losses that you incur. But how you can never win in this game trying to overcome 1.5, 2, and 3R losses. It's just, there's not enough opportunity in the day. You're never going to get your winners to run that well. So yeah, but he knows it. It's kind of interesting talking to some people when you talk one-on-one. Like, how's it going? You find out in the first 30 seconds that person knows what the problem is. So we talked for 40 minutes about that. Really, there wasn't much need to go into the technicality of a bit perhaps, but we didn't. We spent most of the time just talking about that one thing. It's just you gotta obey your stops. Take the hits and go get back at it. So if you're having trouble with that, just know you're not alone. If you're having trouble with overtrading, know you're not alone. If you're having trouble focusing on your strategy, know you're not alone. Everyone's dealing with this to some degree. Even the guy I talked to yesterday, who I'm saying is kind of figured out this whole thing, I'm sure there's something that's got to be, he's got his own indiscipline problem somewhere. We all do. You don't ever really truly get rid of it. Just tamp it down and decrease it. I talked to another trader today, and their issue was drifting away from their strategy. So again, when you go back to this trade 80 idea, trade your strategy, focus. I almost want to make this like, if this was John's trade 80, if it's only for me personally, it would say trade your one strategy, but I don't think that's applicable to everybody, but you shouldn't have too many and you should be trading your strategies. But yeah, I talked to someone who's drifting away from that a little bit. Saw what I would call success in the beginning of boot camp and kind of drifted away from trading what they came here to focus on. And the results show. You get a drop off in performance. So we talked about, all right, you spent 1/3 of boot camp focus on strategy, on the strategy they wanted to trade with a pretty good result. Middle third of boot camp, drifting away from that and seeing the negative results. And so we're going to try to take this last third of boot camp and get back at it. But I've talked about this idea in the last boot camp. I've talked a little bit during the trading room and Bearable Traders. I've never done a presentation on this idea or anything, but it's helpful for me to kind of think about discipline in terms of these tiers, tier 1, 2, 3, and 4. Where tier 1 is kind of the least disciplined you can be, and tier 4 is the best. And tier 1 is really, it's trading outside your trade book. It's never going to work. You have to have a trade book. You have to have an idea of what you want to accomplish on a daily basis, the trade you're looking for. If you're not looking for the trade that you're supposed to be looking for, then you're not looking for the A plus or the A setup in that trade, and you're getting pulled into other ideas and things where you don't belong. And this is where you're going to see your big losses, because you're going to feel so naked and uninformed. If I ever try to take a reversal trade, in the day when the market is selling off so hard, and I know there is no high a day break trade that's ever going to come. If I try to take a reversal trade, I feel like I have like blinders on or something. Like I don't know anything about the trade. It's just trying to pick a bottom, and it makes me feel so dumb. But when I have a trade, a high day one, I can analyze it from so many different perspectives. I can see 15 different variables that might impact on whether it works or not, and I can assess all those. And I take a reversal, and I don't have anything. Like, the most basic idea that, I don't know, usually they have a peaking kind of volume and, and maybe play it off a level, and they never seem to work for me. So, I mean, I don't even know why I would, swing the bat at those occasionally. I think I tried a couple of them this year, and neither of them worked as I would have suspected. Then there's this different kind of indiscipline where you are trading in your trade book, but they're just bad setups. So I saw lots of high day breaks today, like a lot, like as many as you'll ever see. But not all of them were good setups. So, I actually did a good job today of letting the ones go that weren't. So there was a certain time, it was about 10:10 in the morning this morning, about 40 minutes after the open, wherever you were, and the market started to rip, and it just started to pull a lot of stocks through their highs of days. But I went to every single stock I could find as it was breaking its high of day, and nothing had like a volume event suggesting it was going to pop through its high of day, that it was doing its own journey to the high of day, and that there might be an interesting pop I could get there, which would help me get my stop to break even, and yada, 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 the whole trade book. So I let them go. Any of them would have worked, actually, eventually. I don't know about being stopped out or not, but I mean, it was the kind of day where, like, I just, could have taken any of those, and technically it would have broken its high of day and would have run, but they weren't really high of day break trades, and it was the right thing for me to stay out of them, because they're missing my number one entry variable, which is like some kind of good volume event to push it higher. So this is a pretty big leap in discipline, I think. To trade outside your trade book is just being indisciplined. That's just garbage. But it's a pretty big leap to say, like, all right, I'm not going to do that. I am going to take all 5-minute ORBs. I am going to take all ABCDs. They will legitimately have that profile to them, but they're just bad setups. And this is probably going to result in losses as well, but almost certainly less than doing this. And then you start to break even around tier 3, I think. I mean, this is a very rough kind of estimation of performance, but when you're trading inside your trade book, but you're taking the meh setups, the like, I hope that word translates to everyone on here, but it's a so-so setup. I got some good things, some bad things, and I take these from time to time for sure, and the result is usually break even, small lossage kind of trade. But this is this is the next step up in discipline. Get away from the ones that you really shouldn't be taking to the ones that have some good and some bad. And I think trading happens here, to be honest with you. I'm not going to act like I'm so disciplined that I only take A+ setups and all that. That's not true for me. I'm definitely trading in tier 3 and 4, but I'm trying to trade in tier 4 more. And then when you do get into this, when you really have the patience to wait around for the good things to happen, and just trust in the probabilities, trust in the trade book you've created, and say, look, these work. If they're only going to come around one every 2 days or whatever, I mean, yeah, that kind of sucks. But if you make money with a really high probability on that setup, then I don't know. Think about the long-term results of your trading. You know what I mean? That's not a bad thing. I know everybody wants to have this idea, I'm going to make $400 a day, and there's always going to be $400 there waiting for me. But if you're truly trading the tier 4 style of life, you got to accept that some days, like, there might be no trade that really matches what you're looking for. So you're not making $400 that day, but you're not losing $400 either. So I think realistically that's the best way to look at trading. I think the daily goal thing is very hard to do, but not trying to talk you out of it. Just saying, if you when you do get up to here, just accept, you get them when you get them, and when they're not there, just admit that they're not there. But yeah, this would apply to the one of the traders I talked about today. Just trusting in this process that this is the way. Get away from this 100%. Start getting into these these 3 green boxes and play around here. Keep trying to drift over to the tier 4 side of things. Any thoughts on that?
Just a reminder that trading outside of the trade book is not scalping. So a lot of traders is like, oh, I was scalping. So scalping is actually your strategy. You're just going with big size and you're not waiting as long to make profit. You're in and out fast, sort of Andrew style.
Yeah, I hate that term, Dima. Thanks for bringing that up, because so many people do say that. Like, I'm not seeing reversals today, so I guess I'll just scalp. Like, I mean, if that's a legitimate option, then that's what you should do every day, you know. But that's often the result of boredom, you know, and it's also a very gamblish kind of nature. Like, you know, it's like going to a casino and knowing you can count cards in blackjack. Like, you know, that's what I do. I count cards in blackjack. You can make money doing this, no problem, you know. And you walk in and all the blackjack tables are closed. Ah, fuck it, I'll just do some roulette. You know, like, well, okay, have a good time. But there shouldn't be much expectation, you know, that you're going to walk out with your blackjack money, right? Yeah, that's a very good point, Dima. Thanks.
Well, if you want to scalp, you can. You just need it in your trade book with
sure
criteria.
Yeah, no, yeah, 100%. Yeah, I could take that attitude and be like, yeah, sort of the almost the equivalent for me would be like, I'm going to take this crappy high a day break and I'll try to get 20 cents out of it or something. So it doesn't make any sense when I'm usually looking for $1 to $2 moves. So like, I'm not looking for 20-cent moves, and there's no, since there is no trade book for it, there's not even a high probability chance I'll get it. You know, it's a hope. It's a coin flip.
Yeah.
You know. But I think this is what your tier 4 results kind of look like when you really start to focus on the process and trade inside your trade book and wait for good setups. And this is the equity curve of the guy that I asked. He's not here today, but I asked him to come talk tomorrow. So not tomorrow, next week. So he's got a tough schedule in the afternoons around this time. We're going to see if we can make it work out. But this is not by accident. This performance here, these aren't coin flips. This is not by chance. You couldn't flip a coin to come out this one. You know, you spend 6 months flipping coins to make this happen. So like he's got 1, 2, 3, 4, 5, 6, I mean, just tons of green days in a row, flat through here. And then he was actually bummed the day I talked to him yesterday, and he was a little bummed that he wasn't going to have a good day. And I was like, kind of curious to pull up the chart at the end of the day after I talked to him. Like, I wonder how bad the curve dipped. It didn't really dip at all. You know, it's tiny. So he was just kind of bummed that he'd been working out so well that, you know, he didn't make money that day, which is a dangerous thing also, is when you do get really good at trading, when you get a really long streak, you don't want it to end, and you have to accept that it is going to end at some point, you know, and just minimize the damage and then wait for the streak to get back on course. But yeah, as I talked to him, I was like, he only does one thing. He has one setup he's looking for, and that's all he does. And he's getting better and better at finding it and sticking to it. So that's the kind of result that you see. And yeah, it'll be interesting to hear from him. It's neat when somebody has a whole new idea, and when you see a new idea, don't think you have to jump to it either. Like, this is working for this guy at the moment, and he does I'm going to abandon what I've been doing. Listen for the larger lessons in what he's doing if he has time to talk to us. It's not about the technicality of his strategy. It's probably more about his discipline and sticking to it. That's what's helping him, more than likely, but it'll be interesting nonetheless. So risk management refinement is the theme of this week. So you guys talked about this morning. I don't know if everyone here was at the morning meeting. Can you just, in a few words, kind of recap what you guys talked about this morning, Dima?
Yeah, absolutely.
Not a whole slide or anything, but just kind of the broad strokes of what you guys talked about.
Yeah, no worries. There was only 4 bullets in my presentation. So it was risk management versus discipline. So risk management is how you keep your account, and discipline is how you make money. And then the numbers were the stop losses each trade per day per week. And the psychology risk must be accepted. And then that's when we talked is easier to accept the risk before you start the trade. So we need to figure out a way we can be aware and remind ourselves to accept the risk before we enter. And then the emotion that we value losses more than gains. We dwell on the losses longer than we're happy with the gains, but we let them go faster.
Gotcha. Yeah, I don't want to talk too much about risk management refinement for myself because I feel like I've talked enough about how I trade and my thinking behind it. But this morning there was yet another example of what keeps me on the good side of things. Is this idea that I don't know why this works for me, but I like to set a full stop on a trade at a certain level, but I rarely take it. I take it when the trade really blows up against me, but most of the time I assess based on time and the dynamics of how the trade is going and what everything looks like after I take the entry. And it's just a good example on Apple this morning. This is actually a very poor setup. That's kind of embarrassing to show. I was really hoping the SPY was going to carry me to victory here, or at least to break even very easily, and it absolutely did not. I caught the exact top before Apple pulled back. But I realized after I got in, I should have seen a very quick break, or at least a quick break and enough of a move to get the stop to break even. I'd seen enough days like this on the SPY with Apple trending up with it, and I thought I could get that. And as soon as it didn't happen, I was like, all right, something else is going on here. So I got out, and I took why doesn't it have my exit? That's odd. My exit was 156.92 anyway. So my full...
John, are you sharing your screen?
Oh, shit. Sorry. Am I not? Okay, that might explain it. Thank you, Dash. There we go. So that's the trade. But my full stop was down here. And maybe that was a bit wide even for Apple. I don't know if I'd see a couple candles come down that hard. But, it could. It's early in the morning. It's not even 10 minutes into the morning. So I stand by that. That was a good full stop. But yeah, I could realize the trade immediately. I was like, this isn't the thing I thought it was. And I got out at 156.92. So that's a 22-cent loss on Apple. But I was my full loss was like, I'll take a $1 loss if I was really, really, really wrong. This is an odd way to trade. I recognize not a lot of people trade like this. Most people pick their stops, and that's the 1 hour loss, and that's what they abide by, and that's not only perfectly acceptable.
Hard stop?
Say again, Natalia?
Do you use hard stop?
Oh, no, I don't. I use a manual stop, and I always have to say this. I don't recommend people do that, but because I'm
so sorry, John. You do not recommend hard stop?
No, I do. I recommend hard stops.
So you just bought it, and you see it doesn't go in the direction you expect, and you put manual stop in the montage window?
Yes. Yeah.
See, I was never able to do it. I just not so quick.
It takes practice, and it's just, I've seen a setup like this many times where the SPY is so clearly drifting upwards, and not only that, but before my entry, it had put in like the strongest candle of the day, and I was hoping this pop was going to continue in the next candle, and I really thought Apple's a very small spread for its size. I only needed this thing to move about 10 cents above my entry, and I was going to move my stop to break even. I was going to play it very, very conservatively, and it didn't pop at all. I mean, I caught it at the exact top before it pulled back. I think the SPY had trouble getting through its pre-market high here. But the big lesson here is just based on experience, I have an expectation of how fast this should have worked and what this trade should have looked like. And as soon as it started to look a lot different than that, I got out and took the 22-cent loss. And that's just how I kind of operate. I don't like setting... I could play a tighter stop. I don't like not having my own decision to get out of a trade sometimes. So it just bothers me when I first started trading, to watch the price come down to my stop and to get that feeling like, oh, it's going to touch it, here it comes, and it would just bug me to death. So I started to say, you know what I'm going to do? I'm just going to like give a big stop, but I'm going to give myself some decision space to get out myself. It's a personal choice. But again, most people, I think, use the 1 hour stop and they just let it come down and stop out. If it does, it does. If it doesn't, it doesn't. And I think that's a perfectly acceptable way to trade, if not maybe preferable.
Tiffany trades like that, John. So she has her hard stop at 2R, if you will,
Yeah.
but her mental stop at 1R, so she can get out and not lose a full.
Okay.
So she puts hard stop, and if she understands that stock price goes down, she just sells it sooner, right?
Exactly. Halfway,
Okay.
yeah.
Yeah,
Halfway.
thank you. That's my way, yeah.
Yeah, I think once you gain a lot of experience in your strategy, you know what the next couple minutes are supposed to look, especially in a momentum-based trade. This is momentum-based, and it's not a wait and see kind of trade. It's a breakout, and a breakout should happen pretty quick, and it should have a certain look to it. And this just, not only did it not after the entry, but after I entered, I looked at the volume, and I actually entered on declining volume, which is basically the number one no-no for me. So I was like, you know what? I really broke a rule here, and I'm putting all my faith in the market going up and pulling this stock, and this really was starting to weigh on my decision. And as soon as I got this candle here rejecting, I said, ugh, I'm like, what have I done? Get out now. I can easily make up a 22-cent loss. This is not going to be a problem whatsoever. It's nothing, but it's going to be harder to make up $1 loss on this trade. So yeah, if you're a breakout kind of trader, a momentum trader, early morning trader, I think it's not a bad way to go. Use a nice big stop and then give yourself some decision room to feel it out. But anyway, I don't want to make this into it yet another high day break discussion. I just throwing it out there because I did not trade this way when I started. I used a hard stop at a level. I would pick a technical level like below the previous candle or below VWAP here, and I did those things, and that's where my stop would be. And if it stopped out, it stopped out, and if it didn't, it didn't. And actually, it worked okay. It's just that I started to realize over time that like I was taking losses. I was like, man, like here comes Apple coming down, and look, the SPY's coming down as well. And I'm like, I'm going to get stopped out because of what the market's doing and not because of Apple's doing. So over time, I just adjusted. That was my risk management refinement. I said, I'm going to feel out the trade in the moment, and if I think I made a bad decision, volume didn't play out the way I wanted, because if I had entered. Let's say this volume bar had not ended up like this, but it ended up like nice and tall, like taller than this level here where most of the bars are topping out, and the candle hadn't remained near my entry. I probably would have stayed in the trade. That would affect my decision making as well. But I don't know what that volume bar is going to look like until it closes. That's one of the hard things about judging breakouts. So a lot this will happen in a lot of trades. I think I see a volume event happening, take the entry, I go back and assess right as it closes and say, no, it did not happen. And then I have to assess whether I want to stay in or get out. But I wanted to give some time today to one of our group members, Phil, who's been achieving some success and feeling pretty good about his trading. And it's similar topic on the other side, I guess. Not so much risk management refinement, but more target refinement and how to take profit refinement. But it's the other side of the coin. So I wanted to give him a chance to talk. Back to this slide.
Hey, how's it going, everyone?
Hi, Phil.
What I was emailing John about was just some tweaks that I was making to my stop moving plan, just on the kind of theme we have at the moment of risk management. But Mike did, in Mike's one of Mike's recent webinars, he says he rarely takes a 1 hour loss. Kind of similar to what you were talking about there, John. You just know whether it's kind of working similar to how your normal winners would work. and he might bail out of it early. But I started to look for patterns in price action on my winners, my losers, and my break-even trades. And what I noticed was, so just to give you an idea when I would use a break-even trade, I use the MACD as my primary indicator across multiple time frames, big time frames like the 240-minute down to the 5-minute. And my entries are based on the 1-minute chart. I typically get in where we've reached the top or bottom, depending if I'm going long or short on a 5-minute candle. So for example, if I'm going short, what I like to see is my MACD signals, but then I like to get in towards the top of a 5-minute candle on rejection of a higher a breakout of that. So like a false breakout of a 5-minute candle, take a 1-minute entry short on that. So they're pretty tight entries. And I would normally go break even once my entry 5-minute candle, once price breaks below that and makes a further low of that 5-minute candle. So that was kind of the plan I started with. But what I started to look at was where price normally goes to when I get a break-even trade and a losing trade. And what I found was a lot of my break-even trades are failing to move beyond 1.5R. And a lot of the winning trades are hitting 2R easily, normally within the first 1-minute candle. So you kind of know what, we all know when we get into a good trade, if you kind of pick that perfect little spot, you get a nice volume surge and you feel good about your entry. But I found anyway that my break-even ones, the ones that had to come back and test my entry, would normally hit about 1.5R before stopping me out. So what I did was I said that when it gets to 1.5R, I know that it's either going to or likely to either come back, test my entry, potentially stop me out, or it's going to continue moving. But I started using trailing stops. So if it reaches 1.5R, I have a hotkey that sets a trailing stop, which is set to my average cost. So it's a break-even stop initially. And then if it moves, say, another half hour to 2R, that trail will move with it to, 0.5R beyond my average cost. And then if it comes all the way back and stops out at that 0.5, I pretty much end up getting about 0.8R on most of the trades that I would have normally had break even or a little bit of slippage, 0.2 of a loss or something like that.
Hey Phil,
So,
can I bring up the text of your email so people can read it with their eyes, maybe while you describe?
Yeah.
Is that okay?
Yeah.
I just pasted it in here just now.
Sorry, it's kind of hard to describe.
Yeah, no, it's okay. It's I just pasted your email into this slide right here, so maybe people can kind of read along. But yeah, it's a cool concept.
Yeah, normally like my profit targets, I use the CAM pivots as profit targets and have a MACD early exit signal. Basically, if it runs out of momentum before it reaches the CAM. So I generally kind of hold on to the trade for quite a while. But I found that if I take that 20%, I've actually forgot to mention I do take a partial at the 1.5R now. So if I do that, then hit the trailing stop, and if it does come back as a typical break-even trade would normally do at that point, well then at least, it's still, I think psychologically it still counts as a winner. I did see an improvement of 8% on the win rate with it. It didn't affect my profit factor too much, taking that 20%, rather than, keeping that and letting it run all the way down to my target. So.
Yeah, I like this. I actually do something similar sometimes. So I know for certain stocks I try to have an expectation of how fast generally they'll make the move that I'm looking for. So say I'm trading mRNA and I want to get a $2 move out of it. There are occasionally, I expect that to happen fairly quickly. I don't know, maybe within 5 or 6 minutes. It depends. But there are some trades where I get a dollar move. Maybe I get $1.30, $1.40, $1.50, $1.60, and then it kind of wavers in there, and it stays for a long time. And and I can't quite get to $2, and by that time the market kind of changes too. Maybe the SPY was kind of helping me get the move, and then that's kind of flattened out. And my head will say, what would be nice would be to just retain 1R of this regardless. Like we got really close to our target, but it's kind of fizzling out, and I'd like to still get that, but I'd also like to take something home. So there are times when I will put a trailing stop at 1R, and then you got that banked. Similar kind of thinking.
Yeah. It can work. And like what I found as well was on the trades that do work well, and they go, the initial entry 1 minute candle moves, say beyond 2R, which would be categorized as that kind of is normally what my winners would look like. They push pretty heavily from the entry point. But the trailing stop would be way too tight for it to get stopped out before it hit the profit target. So I actually cancel the trailing stop once it's kind of proven itself to not be similar to a normal break-even trade. So if it, finds support lower to my entry and continues to move, I don't need the trailing stop anymore. It's literally just for the ones that fail to get a push beyond 2R, and my journaling kind of tells me that that's likely to come back and stop me out. So just use it for them.
Yeah, to some people this may seem interesting. You get a pretty big move, 1.5, but you only take 0.3R off. But there's a million ways to partial. There really are. And some of them will come up with the same result, but they just work better for your psychology, which is an interesting thing. Some people really like to take 10% off as soon as they cover like commissions. So a lot of people are trading kind of small positions, and they just want that feeling. I don't want these commissions to eat into me every day, so I'm going to take 10% off and kind of cover that, and then we'll let the rest run. And some of those people let the last 90% run a good distance, and there are some traders will look at that and be like, why are you caring about covering $2? But if you do, you do. And for you, if it's taking a bit off at 1.5R is what is helping you, then
yeah, there's something about it, John. Like once you hit that break-even stop, you definitely feel better.
Oh yeah. Don't you though? Yeah, I get more endorphins. Well, I won't say more, but I get a very good feeling when stops at break even. I love it. I love it. I'm going to emphasize that a lot in the next webinar I do about breakouts. Is like this is more a game of getting your stop to break even. The rest is the cherry on top, kind of. But that
risk is off the table. You're almost in a better position to view the price action unbiased, I want to say, because it's the money isn't on the table anymore, is it?
Yeah, I totally agree. Yeah. Oh, very cool. Any thoughts? Anyone partial kind of like this, or have a different? I don't know. Well, different, but maybe it's.
Yes, I have one suggestion for you to discuss. If I enter the trade and it goes direction I expected, and I make money, and I move my stop up, let's say if it is long position, I move my stop. I do not do partials. I do not just sell part of it. I'm assuming if I move my stop, I will make more money and I still secure my profit. Do you agree with this?
I'm not sure I caught all that, Natalia.
So I enter the trade,
Yeah.
right? I have my stop loss, let's say, I'm talking about long side, right? I enter my trade, my stop loss is 10 cents below my entry. And now price go up, and I'm using like trailing, or just move it like 10 cents below the last. I have button which follows my price. I do not sell like partials. I don't use it.
Yes.
I think I make more money this way.
Okay. Yeah, I understand. That's a trailing stop, and it's there. Yeah, people use those as well. They can be very good. They're especially good when you've caught something that is entering like an obvious trend, maybe more obvious than you thought you'd even see. There are times, well, for instance, I mean, we could look at actually. This was an interesting trade today.
I was just curious, so this, when we sell part of the shares, it is just to plug some profit, and then we move stop, but the number of the shares is reduced, and obviously we make less money.
Mm-hmm. Yes, yeah. I would say, Natalia, it's very hard to say which one is better than the other. I can't say that a trailing stop would work better than partialing and taking some off. It's a very, again, I'll repeat myself here. It's the hardest part of trading to figure out is how to take your money. It's very, very difficult. And I, for example, you look at this Rivian trade today. This popped a lot better than I thought it would. So this was a pleasant surprise, and I got into this trade, and I was hoping to get up to this R6 level, 41.21-ish, and I got there in a heartbeat. And I was like, whoa, that was fast. Well, I gotta make a quick decision. I could take all the money off up here, which is fine. That was my target. But what if this is going to keep pumping, right? That could have been an opportunity, Natalia, to do what you're doing, to put a trailing stop behind it and put a 25-cent trailing stop perhaps and see maybe this is going to pump another buck. Maybe something wild is going on. Maybe news came into Rivian that I don't know about. But if it had come back down, I would have reduced my profit by about 25% in this case. So I'm more of a take everything off at a target kind of person. And so I also know, like, this is a $40 stock. To get a dollar move out of a $40 stock is pretty good. That's a good move. And so I just kind of assessed it in the moment and said, I'm just going to take the money off here. But in hindsight, that was the right decision. But actually looking at the volume coming in, I mean, this volume bar here is almost as high as the opening volume bar. And that's really impressive. I mean, it was really coming in strong. If it had done one more of these, this thing could have really ripped, in which case a trailing stop might have been the right answer. But I think they work best, Natalia. I think a trailing stop works best is when you catch momentum or a trend that is much stronger than what you were expecting. I think that's when they tend to work the best. Otherwise, I think the better thing to do is to move your stop. If you want to use a trailing stop, is to do it manually and choose places where the price has found support. I don't know if I could find.
Oh, okay, yeah.
This one.
I got it.
This is an unexpected nice move on test. I mean, I was hoping it would work. I just didn't know it would work this well. This could have been a good place to use a trailing stop because it just started the trend really nicely. But here's a good example of where you might use a manual trailing stop. So this is AMD, entered at 103.60-ish, 103.63. My target was 105 up here, where you can see this R4 low. There's another Camarilla pivot up here. Got a move, but then it got into trouble, and it started playing in a range between R3 and this isn't a level here. This is the current price when I took the screenshot, 104.37. But I could have put a manual. I could have moved my stop up below this daily level here. I'm not sure what this daily level is. I can't remember. But once it got above it this time, I could have said, all right, it's either do or die on this thing, and I could have manually moved my stop up to here. That's like a trailing stop, except you're doing it manually. You're choosing the levels, as opposed to choosing, I'm going to use 15 cents or 20 cents. Because those, if you use a trailing stop that's just set at 10 cents or 15 cents, it's really actually kind of arbitrary. It doesn't have anything to do with support or resistance. It's just sort of a random arbitrary choice of price. And so that's why I tend not to like them for the most part. But hey, to each their own, and whatever you like to do. Because you're
And just to,
yeah.
go John.
No, Ricardo, go ahead.
No, just to complement what you said, like whatever your final choice is, Natalia, make sure you evaluate it and track it just like Phil did. Because one thing is using what you like, other thing is using what you like and working or not working. So whatever option suits you better, make sure that you also track it. If the trailing stop works, perfect. If it doesn't work, also make sure that you analyze it as well. So I tend to agree with John that at least the first initial stop needs to be in a technical level. At least that's the way that I play it. But from that point onwards, it's a little bit psychological, the profit taking and the moving or not moving the stop. But to make sure that you evaluate and you keep track of your statistics. That's my take.
Okay. Thank you.
Yeah, that's a great answer, and it's really the right answer. Is what do your numbers tell you over time? And that's why, from day one we've been talking about journal and keep statistics, because you can use it eventually. It's just you got to trust in the process. It takes a while to get all your data together before you can go back and do the somewhat difficult task of trying to figure out what's a good partial strategy for you.
John, I think I also know a little bit about what Natalia's doing. I kind of do the same thing if I'm in between ranges, like technical levels, like R3 and R4, and there's no other real technical levels. I'll move it up to like the last consolidation period. So if you're like right in the middle of the range and you go to the last consolidation period and it's still, say you're moving up, the market makers are less likely to come all the way back down through that consolidation period to grab shares and then move up again. They're only going to move down about part way and then go back up. If they go through that, then it's probably a reversal. Anyway, so that's kind of been working for me. So I kind of know what she's talking about as far as that goes. If there's no other technical levels, that is. But usually I'm on a technical level if I could find one.
Yeah, no, totally. Yeah, completely agree. I don't know. It's so hard to direct somebody toward the right how to take money strategy, but I look back at like one of the reasons I changed how I do things is just there's trades like this, like on Disney with this $3 move, and this is great. It's not exactly the trade I'm looking for. I'm looking for one where I partialed every dollar, but trades like this are very rare for me trading high day breaks. So this is Disney making a $3 move. If you know Disney trying to get $3 out of this thing, it's really tough.
Are you sharing that, John?
Ah, shit.
Yeah, I was going to ask that.
Son of a... Yeah. Okay. Okay. Sharing it now. But I just came to realize after a while that I was chasing... Every day I wanted to see a trade that had a certain look to it with these nice red triangles stacked over each other. And I was like, this was my goal, to get this. And then I just realized one day, like, I only have to get Disney to move not $3, but this looks like I partialed at $1 and then every 50 cents going up, I think is what I did. I probably needed Disney to move $1 to get the same amount because I'm taking off 50% every time. It was just a hard strategy to make. It's not that it wasn't profitable. It's just I was making it way too hard for myself. This must have been early. This was very early in my trading because this is Baidu and I was taking 50% partials here every 50 cents. But in any case, this is a nice move. This is a $4 move out of Baidu, taking money off every 50 cents. But really all I needed out of this, if I'm taking every 50 cents, I probably needed Baidu to move $1 to equate to this trade that moved $4 and just take it all off at the top. And anyway, if we went through a lot of these, I could find a better example later on in my trading when I was doing $1. I moved away from 50 cents because I realized that was stupid. This is actually a good tale of not risk management refinement, but partially refinement. But in any case, I'm not going to try to find the perfect trade here. I don't think I'm going to find it. But all these where I partialed on the way up, getting these big moves. Like this is Zoom. Zoom doing $4 back in, or $6 back then, was the kind of moves it used to make. But again, I didn't need to get a $6 move out of Zoom. I needed to equate to this probably a $2 move or whatever. I'm not sure the exact math. But in any case, like you refine your risk management, you're going to have to refine the profit-taking side of it as well. Is that actually one of the themes coming up, Dima? Is it?
Yeah, profit taking.
See, I shouldn't be wasting all these good lessons this week, and I have nothing to talk about the next week about profit taking. So I guess we'll review some of these thoughts, at least as it concerns me.
Mark Douglas talks about in his book that the market will always give you a little bit. So take what the market gives you. Because those runners are more rare, and even though that's what we strive for, we don't know until it actually happens. I think trailing stops for day trading are volatile, and they'll stop you out more often. I really like what Phil does, because you partial and break even, then you put your trailing stop, because then you're maximizing your profit. But to use it without partialing, I think you'll get stopped out more often.
Yeah,
If you're a morning trader.
I like Phil's because it's a system. It's his system, and now he can tweak it. Whereas a trailing stop is not. There's not as much a thought out system. What I do like about Natalia's thoughts on the trailing stop, though, is that she's talking about you never reduce your buying power. You're going to take 100% of your shares until it pulls back a little bit, and that's kind of where I am. I'm not using a trailing stop, but I am getting 100% in, 100% out. And that's what I prefer. So. I totally see that logic, and as I look back on how much buying power I was taking out of my trades, trying to hope to get more moves, it's almost kind of laughable how much what I was asking of these stocks to do, But yeah. I was very much, when I was new to variable traders, I had never heard of partialing. I didn't know what it was. It was like day one in the room. People were like, I'm taking a partial. I was like, what the hell is that? What are you talking about? And I realized, like, oh, that's clever. I never thought about that. I had done some day trading. I just bought and sold. And I think I never thought about taking half the money off and then letting some run. Like, that sounds very, very clever, And so I chased that idea for a while until I realized, like, it does work well for some strategies. There's something else that could work better for me. But if you're a reversal trader, for example, and you're going to trade over an hour trying to get something to reverse, I think, then partials start to make more sense to me, and then because you're exposing yourself to much more time in the market and different conditions that can change, and you got to take some money off.
John, I don't know whether this will be of help to anyone, but I did a similar kind of test across 4 different exit and profit taking scenarios. I trade a pretty similar style to Eamon, and Eamon, as you know, he's all about profit taking at the ATR. He talks about 3 consecutive candles. So they were 2 different profit taking scenarios. And then I also used the MACD as a signal and a CAM level. So they're kind of 4 different tests that you can do with your trade.
Mm-hmm.
So you can see which one performs the best out of those 4 different scenarios over time. For me anyway, I found that targeting the cam and then bailing out early with a specific MACD signal was the kind of sweet spot. But just kind of whatever it is for you, just testing out 4 different or however many different scenarios give you some really kind of clean data to know where it's best to get out.
Yeah, I that's a very wise idea, Phil. That's a good point. Yeah, to come up with 3, 4, half a dozen different ideas about how you might take your money and go back and look, if I had done that, what would the result be, and compare them. I don't even know if I should mention this, but it was the last boot camp or the one before it. We had a guy who was like a spreadsheet genius, and he made every combination of partialing, not everyone, but like he made 230 something different partialing scenarios, and he compared them all. And the spreadsheet went back automatically in his trades and figured out which one was the best one. It was very interesting, and I don't even want to say what the best one was, because in the end he didn't even like the answer. But the best one turned out to be he should just get in and get out, and then all the other 229 ones were somehow not as profitable. But he didn't like that answer, believe it or not. He wasn't even sure. Oh, I can't remember the exact thoughts he had, but I know
That's even worse. He has the data, he collects it, he runs the tests, and then he doesn't accept the
that was kind of it. Yeah,
that's the worst.
I don't know that he thought he had the discipline to do it. You know what I mean? Like that he could watch that much money come and go, and that he might, I don't know what his targets were, but that he might be looking at 1.9R trades and watching them all go back down to zero. But it was a cool spreadsheet. Not everyone, not sure I could have put together what he did. It was very interesting. But yeah.
It's very difficult to do. I really struggle with this. I have sample sets that tells me what to do. I generally, obey the first partial, but to just get out, and even though I know runners don't happen often, it is very difficult to get all out if your stock is doing exactly what you want it to do.
Yep. Oh yeah.
I'm trying to quantify that part, or I always put the stop, the hard stop, but I'm looking to see if I can quantify now if there are specific signs showing me that it won't continue to run, or which ones I can and cannot quantify. I'm having that question in my head, but I have no answer to it so far. If anybody has suggestions.
Well, I'll tell you what, guys. We are at an hour right now. This is a good discussion, and I think Dima, when is? It's a dog back there. That's a good-looking dog, Dima. Is that a Goldie?
Yeah, yellow lab.
Yellow lab. Both great dogs. When is the profit-taking week?
Oh, I can tell you in 2 seconds. How to take profits is the week of March 21st.
It's next week. All right.
Yeah.
So we should table this discussion, but think about what we're talking about here, because we could have a fun hour. Hopefully we can hear from that other trader next week. We'll see if that happens or not, but we can definitely have a great discussion about how to take profits. So if you guys have some stuff to bring to that meeting, would love to see it. Phil got a great discussion started here, and obviously, I mean, we're just at the tip of the iceberg of what everyone's thoughts are. So definitely some stuff to talk about next week.
Hey, John, just real quick for Ricardo, I mean, what's been helping me stay in longer is just getting better at reading volume and level 2, because like Thor says, if that ladder's stacked, man, just keep going with it. Until you see that ladder start getting even and indecision in the marketplace, that's when you want to start thinking about taking profit. But if it's stacked up to your side, whether you're long or short, like he says, just keep going, and he's yet to be wrong. So it's been working for me.
Yeah, and if it doesn't always have to be, I don't want to say be that hard, but it's sometimes it's very obvious. I mean, just this Tesla trade, my target on this was $785 with an entry around 780. This thing was cruising. I never looked at the level 2, but it was just moving. You know, like this. It's just looking, and it's not even the volume that's pushing here. You can see after the entry, the volume goes back to fairly normal. It's a little bit built up here, more than, well, certainly more than this kind of gulf in here, this valley. But it's not blowing it out of the water or anything. But just watching the price, it was just eating it up. It moved $5 really fast, you know, like in 1, 2, really 3 candles. You know, it had moved $5. It was cruising, and it was a bit of a feel thing. But I was like, you know, there's not. I may feel very foolish getting out here at 785 and might hold out for the next decade level of 790. And this is kind of a case of like applying a trailing stop. I got quickly very comfortably above 785, and then I didn't do it. I was kind of like still manually on the keys, but I could have set my trailing stop at 785. That would have secured me at my original target, you know. And if it wants to run more, then it runs more. You can see what you can get out of it. But if you find yourself caught up in momentum for whatever reason, you got to learn how to read that, and whether it could be the level 2, like Tracy's saying, and what Thor talks about a lot. It could be just kind of a feel for what you know is like. Is it impressive for Tesla to run, you know, $5 and 3 candles, 3 really distinctive white stepping up candles? Like, yeah, it's a pretty good move. You know, it's a lot better than I expected. This is like looking back at what Tesla had done, except to the downside. This is the best long look it had that day. And also, don't forget this: the market's taking off as well, right? So we've got a buddy down here helping us out. But in any case, stop talking about me. But yeah, we'll meet again next week and talk about some profit taking. I saw in the chat someone was asking about this book that Vincent said he read, Beginner's Guide to Day Trading Online. I put a link in there if anyone's curious. I'm not promoting it as someone who cares who buys the book or not. I don't know. Written by a lady named Tony Turner, but it's a good book if you're looking for something to read and just brush up on some day trading. It's a very comprehensive book on trading if you want to check that out. All right, guys. I'm out of here. You guys have a great rest of the week, and enjoy your last third of boot camp.
Thanks, everyone.
Thanks.
Thanks,
Bye bye.
John.
Guys.
Thanks, everyone.
See you later.